Spain, for example, the headline rate of VAT is 21%. That is a tax on the sales price. What we are going to have is a tax on the cost of the goods as they are imported. So that is a different base to the selling price. So the cost, 17% of the cost, not only 17% lower than 21%, but 17% on a cost would be, for example, lower than 17% on the sales price. So there is still going to be a differential, but it's going to be a much smaller differential than we have currently, let's say.
For the union, what I'm getting in the workplace is people obviously worried with the transaction tax, which I know obviously has an impact. So that plus probably also what is being mentioned is a 5% rise in insurance, social insurance. So there is a concern. There is a concern around what the cost of living will look like in the coming month when this comes into force. People are taking it for granted that it's simply a 17% hike in goods and obviously impacting the cost of living.
Don't forget that it's not a flat 17% increase, because some articles that we currently buy are already paying 6%, 12%. So it would be the difference, you know. And remember that in the VAT system, you know, we're not going to have a VAT, but we're going to categorize our goods in the same way that the VAT system does. So we are going to have the headline transaction tax, but then we're going to have a mid rate and a low rate, just like with VAT, and those will be lower rates than the 17%, and certain classes of goods can go into those categories. So, for example, as I understand it, food in Spain pays 10%. They're in the mid. Food is in the mid rate, okay, and not all food. You know, just some articles of food. I think it depends on the type of food. We could and probably will put our food in the mid rate. So, okay, food currently doesn't pay anything. In the future, it might pay not the 17%, but a mid rate, which could be 4% or 5%. I don't know what it's going to be. We haven't been told. You know, that would be the extent to which the prices might change.
On balance, we have welcomed it as a group, and the reality is that what's the alternative? Yeah. What I tell to members, what's the alternative? And they say, well, can we carry on as we are now? No. These are interim measures that as soon as a no agreement would have hit, it would have been a hard border.
Any business in Gibraltar buying goods in the EU will buy those goods free of VAT. So the exporter from the EU will need to justify the export in order not to charge the VAT. They have to do that through a customs process. So therefore, if there is communication between the EU customs and the Gibraltar customs, if a company has done a clearance to justify the non-payment of VAT in the exporting country, therefore the Gibraltar customs is then going to be informed of the goods coming into Gibraltar to be able to levy the 17% VAT. So commercial quantities will be sold without VAT and will pay the transaction tax in Gibraltar. A Gibraltarian going to Spain and buying something in Spain will not be able to have the VAT rebated from Spain, but will not have to pay the transaction tax on importation in Gibraltar, and vice versa. And as I understand it, also on small parcels being sent by post or by courier from Gibraltar to anyone in the EU will be subject to have had the transaction tax charged here, because it will have been imported here, but will not be subject to the VAT charge in the country, in the receiving country.